Good afternoon, ladies and gentlemen, and welcome to the Good Energy Group PLC full-year results investor presentation for the year ended 31st of December 2020. Apologise for the delay of the start of this event. Throughout the presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate. These will be available via your Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Juliet Davenport, CEO, and Rupert Sanderson, CFO of Good Energy Group PLC. Good afternoon.
Good afternoon and thank you, and sorry for the delay. My commuter decided it didn't really want to start working this afternoon, so it went on strike. So good afternoon and welcome to the Good Energy 2020 results. Rupert and I are going to talk you through the results, and we may bring in Charlie as well to talk through some of the more strategic part of what we're doing on mobility as a service. So just an overview, I'll give you a very quick overview of the business. Rupert will talk through the detailed financial performance. I'll give a strategic update and then a summary at the end. So just, I guess, in notable activity this year, these are sort of just some clips of what's happened in 2021. One of the things that we were working through the whole of 2020 was our greenwashing campaign, which was really to try and make sure that people were buying truly green products in this marketplace. We'd seen a lot of entry into the market of people mis-selling on green. And so this is part about protecting our customer base and being able to grow our customer base. The other part was our investment in ZapMap and really the transformation we're seeing in the electric vehicle market and the energy transformation overall, how we're seeing transport really move to electrification. Then we've been talking for some years about the asset base, so we own renewable generation assets, but it's always been quite difficult to explain, one, the value of that, and two, how the debt looks. So we've restructured that and revalued that, and Rupert can talk you through what that looks like. And then finally, Nigel Pocklington joining the company as Group CEO. That's really exciting. He's going to bring a real transformatory sort of piece around digital marketing and really help us boost the proposition set for Good Energy. So in terms of the overview, we've had a really, I would say, positive performance in 2020 despite COVID. So obviously we've been operational throughout that whole period. But what we've managed to do is to produce solid cash, really by looking at how we're doing cash collection. And also our investment in Kraken meant that we did reduce our overall overhead before COVID turned up. So we actually were in a pretty good position going into COVID. We've also managed to continue to roll out our strategic development with some delay to Kraken, but not much. And so by the end of the year, we have now successfully implemented the Kraken system, which is the domestic supply service system. And that allows us to now roll out smart metering and really start to get into data around domestic consumers. And then looking forward, really how we're thinking about growth and where we're taking that. So our investment in Zap has allowed us to really bring in an innovative company that is really trying to transform the electric vehicle charging marketplace. And that's given us an opportunity to support them, invest in that organization, but also to build mobility as a service between Good Energy and Zap. So generally good year, continue to invest. And really, and we have some growth in the core business of business customers, but really we're seeing big growth potentially coming out of ZapMap. I'm going to turn over to Rupert now.
Thank you, Juliet. Good afternoon, everybody. So this first slide is just a bridge of our profit before tax from 2019 to 2020. And there's quite a lot going on, both in terms of sort of external environment, COVID being the biggest impact there. The business delivery plans that we have taken control of, so what I would call the sort of internal performance. And then there's two or three sort of specific items I want to draw your attention to. So on the left, we start with what was our underlying profit before tax in 2019 of 2.1 million. The biggest negative impact from a P&L perspective in 2020 has been COVID, and that's really manifested itself in a number of ways. Within the supply business, we see the impacts really in the half-hourly demand, which is our bigger customer demand, and then some of the SME customers. We saw those segments reduce their power consumption in the summer, in the period of that first lockdown, by between 30 and 40% on average. There are obviously some businesses that shut down completely. Some businesses actually probably increased their consumption, but it was a very, very significant shock, that first lockdown. And that also resulted in us needing to sell back the excess power that those customers were intending to use into a market where the prices were falling, power prices were falling, because demand across the UK, in fact, demand across all of continental Europe in that first spring lockdown was sharply reduced. We've also seen some additional debt provisioning. We call that expected credit loss provisioning. And whilst that is not as significant as we expected it to be when we announced our half-year results, because our performance on cash collection has remained very resilient, there is an additional impact of provisioning, mostly as a result of the fact that the economic outlook still is not as good as it was when looking back to the sort of start of 2020. So in aggregate, that's around about £2 million of impact. So a very significant sort of P&L impact, really the majority of which came in that first period of lockdown. As Juliet talked about, we've completed the migration of our domestic customer base onto a new billing platform, the Kraken system. And in doing that, we have saved around £2.7 million worth of predominantly headcount costs. And we initiated that program at the start of 2020, and we finalised the migration at the end of last year. So that's been that's been both a benefit to us from a P&L perspective, but it's also underpinned a lot of the strength of the cash collection benefits we've had within the domestic part of the business. So that gives us a sort of normalised bar in the middle of the slide, that middle blue bar, from which we then got sort of two structural changes. The first is we have brought in for the first time the results of ZapMap. So we own a majority stake in that business now, so we consolidate its current loss before tax into our result. And then we have there's two impacts associated with the generation revaluation. The first one is an ongoing impact, and that will be a higher level of depreciation charge that goes through the P&L associated with that upwards revalued portfolio, although it has no impact on retained earnings and hence ability to pay out dividends out of retained earnings in the future. And then the second is one of the sites, a very small solar site. We actually had an impairment on that site as a result of that revaluation. That is a one-off impact. So that leaves us with the underlying profit of 0.4 million. The completion of the Kraken implementation was also finalised in 2020, and the remaining transformation costs are shown in that final orange block. So it leaves us right on the cusp from a reported perspective in terms of a sort of roughly break-even position for the year. So just pulling out a couple of other points around the sort of income statement as a whole, and we've sort of gone through most of the profit bridge. So I'll really just pick up on revenue. So revenue, despite the fact that we have had quite a sharp contraction over the summer and to a lesser extent in the autumn in our business demand, we have still shown an increase in revenue. Domestic consumption has remained relatively static in electricity. Gas was a little bit down on account of the warm start to 2020, and we've also seen a slightly higher level of prices in that contracted business segment. So we've mitigated most of the impact of that demand reduction and kept revenue slightly moving forward. Cost of sales is slightly ahead of the increase in revenue, and that's mostly on account of those one-off COVID impacts that I touched on before, and the additional depreciation in the generation sites, which is accounted for within cost of sales. Otherwise, the gross profit or the increase in cost of sales would have been very similar to the increase in revenue. So if I move on to cash, and I think cash has been the sort of standout area of our financial performance for 2020. And if you look down the sort of two comparative columns in that chart, you can see that our operating cash flow before working capital, a positive working capital movement, and lower finance costs are all ahead of the comparative performance in 2019. And I think that's underpinned both by the successful implementation of that Kraken system, alongside improvements that we had been putting in place during the end of 2019 and into the start of 2020, that have put us in really good stead to maintain a really strong focus on cash collection over the course of this year, despite disruption. We have got a quality customer base within the business sector. We have a number of blue chip companies in there that account for a relatively significant proportion of our business segment revenues. And we have a very high proportion of our domestic customers paying by direct debit. It's around about the 85% level, and we've really seen very little sort of change in the sort of underlying behaviour and payment pattern of those customers, which is very pleasing given the backdrop of such economic uncertainty. And it's provided us with the platform to continue to pay down debt, as we have done over recent years, but also out of our own operating cash flow, allow us to fund growth investment or potential M&A opportunities, follow-on opportunities, as we have done with ZapMap. And I think that's those combined themes of debt reduction and investment expenditure are ones that will continue into future years. This is a slide that we pull out for each one of our results presentations, which is really sort of showing that similar theme around debt reduction over the course of the last 3 or 4 years. And so the net debt at the end of 2020, a little under 35 million, is you can see significantly down over recent years. And as Juliet was talking about, we have looked at the way in which our generation asset has been represented against the debt that supports it, and the debt effectively amortizes over a longer period. So in the early years, the interest charge is much more significant, and therefore the debt takes a longer time for the absolute quantum of it to reduce. Whereas our generation assets on a straight line depreciation basis have been reducing in notional book value more quickly, and so it was starting to get to the position where it was very hard for investors to really understand the relative values of the debt and the asset that it was being financed, the debt was financing. And so at the end of 2019, we started the discussions on the revaluation of that asset portfolio, and we completed that in the first half of 2020. And that's resulted at the end of 2020 of an uplift to our reserves of around about £13 million. And so with the debt reduction and that asset revaluation to market prices we saw in Q3 2020, our gearing has reduced to a little over 50%. And as we look forward around our sort of capital structure, the refinancing of the generation debt that we completed at the start of April 2021 is effectively the next step in the balance sheet structuring. So that has provided us with approximately it's a little under £8 million of unrestricted cash, mostly as a result of taking out some of the reserve account balances from when those first generation assets were financed, that we can put back into the rest of the business. And so this gives us really strong visibility over the ability to repay Good Energy Bonds 2, which is a little under £17 million worth of retail bond, where the first maturity is this June. That will allow us to effectively remove debt from the supply side of the business, so we are only left with debt supporting those generation assets, which I think provides a sort of much clearer and cleaner capital structure for the business going forward. Final slide, just in terms of where we are at the end of Q1 of 2021. So our current trading has been in line with expectations for the first quarter of this year, and the cash collection progress that we saw during 2020 has been maintained into 2021, and that remains consistent and strong. In terms of some of the actions we took at the height of the pandemic to ensure that the business was safe as we sort of embarked into a period of very significant uncertainty, we sort of restricted some of our sort of marketing comms and test and learn spend in 2020, and so we are looking to reinstate some of that investment into 2021, again out of our strong operating cash flow. I'll let Juliet talk to all of the piece around future growth and leveraging the basics that we have now in place with the Kraken system and the NSEC system, which is a system that supports our business customers, and the smart meter rollout, which is gathering pace as we emerge from lockdowns. And finally, I want to close with position on dividend. So the board has announced that we will not be paying a 2020 final dividend, alongside that we wouldn't pay an interim dividend for 2020, but we've made the strongest commitment we can to our intention to recommence that program from 2021, recognizing the importance of dividends to many investors, but also balancing against the future investment we have, both in the sort of core business and in some of the new growth areas that we see. So I think at that point in time, I'll hand back to Juliet, who can talk a little bit more about future strategy.
Thanks, Rupert. So just as a kind of overview of the strategic sort of review, where we are today is that this kind of highlights the core capability and competence of the company today. So we own our renewable energy, we own our own generation assets. We actually develop those assets, we operate them, and we trade the power out of them. So we have a pretty deep knowledge of how to connect and integrate renewables into the electricity system. We also operate what's 1,600 PPAs with renewable generators across the system. And we also look after, I think it's about 170,000 feed-in tariff customers and we're the second largest feed-in tariff customer base in the UK. And feed-in tariff is mainly renewable generating on people's roofs. That's in the form of solar with some small wind and some small hydro. So that's where kind of the business has come from. We use that power that we buy there to supply to consumers with a truly green proposition. And one of the things we've been working on this year is the greenwashing campaign to highlight where other people are selling propositions that aren't properly green. And we also use organizations like Ethical Consumer, A Good Shopping Guide, in which to demonstrate why our proposition is different. One of the successes we've had this year is that the CMA is now doing a review of this sector. BEIS is also carrying out a review, and Ofgem is looking at it. And it was a recommendation for the Climate Change Committee to government that they need to consider protecting green consumers. So we think this is an area where we have struggled on the domestic side because we've seen cheaper, sort of less green products sort of sell themselves as green. And undermine our proposition. So that's been quite an important part of our work for the last 12 months. And then obviously the feed-in tariff business is important. It's a recurring revenue stream, but also feeds into the future generation services for customers, for householders. And as we evolve, one of the key areas that we've looked at, and we'll talk through a little bit more, is the energy as a service, and particularly EV is the first area we've worked with our investment in ZapMap and looking at an end-to-end solution for people who want to drive an electric vehicle. So if we start with what building blocks we've put in place to deliver on this strategy, the Kraken Customer Services platform for the domestic customer gives us fully scalable technology. It's an up-to-date technology that was specifically built for this marketplace. And we're already seeing significant returns in terms of reduced cost and improvements in data. Smart metering are going to be the next key piece that we need to implement in 2021. We've done a certain amount in 2020, which was slowed down by COVID, but we really need to accelerate this now because smart metering is all about getting the data on your customers and then being able to provide them data-led services. NSEC is a business platform that we're part of the way through transforming onto. We've got about 80% of our business customers migrated onto that to date. That allows our business customers to a self-serve portal. It's much better integrated with the brokers. So it gives us a better billing platform than we've had previously. And then mobility as a service, we've talked about, that's really the ZapMap investment and beginning to work through what that commercial proposition looks like. And then the final point is sort of mapping off the back of what we've been doing with Zap. What does business proposition look like in terms of for fleets, in terms of mobility, but then what do propositions look like in heat and flexibility services? And how do we really take some of the innovation work that we did sort of 2 or 3 years ago on electricity and smart export guarantee and bring that in as a commercial proposition to consumers? The first area, so in terms of the success on the Kraken portfolio, the implementation was to reduce cost, which we've done successfully, improve service. And what we've actually seen during COVID is a lot of people have switched to email as opposed to phone, which is really important. And so you can see that our email response time has gone down and our Trustpilot scores have gone up. We've also got better scalability. So we've reduced the amount of paper that we need to do, which is reducing cost. We've got people using the app and portal, which is a better self-service capability. And we've got good debt collection with people, a lot of people of our customer base using direct debit to pay their bills. And essentially, this platform then allows us to use agile tariffs. It's one of the few platforms in the market that can facilitate agile tariffs. It can support smart meter rollout. And we're really looking to how can we leverage the value of this platform into new products and services. And we'll talk briefly about the ZapMap flash tariff later on in the presentation. In terms of the energy as a service, I guess what we're trying to do is that we see, if we take a step back in terms of the energy market in transition, one of the key elements that everybody's agreed on. So there's various different paths, whether you're taking a hydrogen, carbon capture and storage path, or whether you're taking a sort of pure renewable path. Either way, we're going to see more electricity generated in the market, and we're going to see more renewables come into that system. So we've existed in this market to enable this transition, be part of this transition for 20 years. We know a lot about the renewable electrification side of this market. We've got proven credentials in terms of how to contract and how to trade in this market. And we've now got a platform that really gives us the data and digitalization that we can then evolve into these new propositions that we're going to see coming forwards. Because one of the things we absolutely know, and the Climate Change Committee report came out with, that a lot of the actions that are going forward on climate change is going to need engagement from consumers. And we are at that sort of juxtapoint between consumers and the marketplace. And that is where we see using data-led services to really leverage our position. In terms of focusing on mobility as service, I'm actually going to ask Charlie to join us here and to take us through the slide.
Thanks, Juliet. So Juliet has touched on their mobility to service and how that's part of an evolution as our business from energy to service. And for us as Good Energy, really, it's about making sure that we remain at the heart of the ecosystem focused around electricity. And for us, that's around more access to more energy throughout this entire mobility ecosystem. When we look at customers within this space, there's broadly two. There's the direct ownership of electric vehicles, and these are your traditional direct consumer drivers. There's also the business side, and we see those split into two areas. One is the centralized fleet. So these are your very classical fleet, the likes of Royal Mail, where drivers go back to a depot in an evening and charge up there. The other side of this is around decentralized fleets. So these are companies like DPD, like Virgin Media, where fleets will be going home in the evenings and the drivers have ownership of those vans and taking them back. So solutions there. That also covers the wide range of drivers on company car schemes, salary sacrifice and the like as well. And for Good Energy, we see this in four key verticals: through supply, through infrastructure, through services, and through EVs themselves. And the reason behind this is that the shift into electric mobility is much more consumer and customer focused than it is focused on the car. And all of these inputs help to form what that mobility as a service piece looks like. The 100% renewable supply, as Juliet mentioned earlier, we received the U-Switch Green accreditation. This is for the gold supply, and it really helps to differentiate our 100% renewable supply offering in what is quite a homogenized market in energy. And that becomes a real powerful piece, not only for domestic customers who want to make sure their cars are powered by green energy, but also for businesses who want to be able to report on this as well, that they're powering their fleets on green energy. The infrastructure side, again, we look at this in two ways. One is for businesses, and we've built up our 1-point offering, which is around hardware installations, covering a range of EV chargers through from slow to rapid to ultra rapid. And we're working alongside a funding partner in Horizon. And what they're been able to do is to offer different upfront funded solutions. We know that the installation of these chargers, from talking to business, cost is one of the key issues. So ways of spreading this out over between 5 and 7 years helps to remove one of those barriers to adoptions for businesses. And we'll also be working on solutions for domestic consumers as well, of being able to spread these payments over a 12-month period just to help remove those barriers. In the services side, this is where ZapMap comes to the fore. And alongside the car itself, we also need to be able to search, plan and pay for these opportunities. And that is core to what ZapMap does. We'll touch on that shortly in a moment. We have a partnership in place with a company called Mina. And what Mina do for fleet managers is they help to separate out the cars charging at home from the rest of the home electricity. And for a fleet manager, that means they're able to settle those payments and do reimbursements for their drivers separate to their home electricity. ZapMap last week, they signed a partnership with FleetCor, who are one of the leading global providers of fuel cards. And in the UK, they've got over 40% market share. And they're building out through their All-Star One electric card, an EV fuel card for customers. And ZapMap, through their ZapPay technology, that's going to be the payment platform through the app as part of the on-the-road charging solution there. And what that solution is aiming to do is for a fleet manager is to replicate the fuel card as it stands today. So for businesses that are adopting electric fleets, when they go and charge and pay on the road, they'll be able to pay via ZapPay. And when they go home, these payments will be settled via Mina. And it means that all of that reporting, all the reimbursement is able to be brought through in the same manner. And again, for businesses, it's about removing those barriers to adoption. And we look at expanding these range of services out again through partnerships in the likes of insurance and many others. And then finally, on EVs themselves, for Good Energy, this is another route to market for customers that are first either customers with us now, for business customers, domestic. They'll be needing an electric vehicle to go and join this revolution. And what we will see is through partnerships with select car leasing we have at the moment and expanding these out, is working alongside them to provide tariffs that ties into the length of those contracts. So for Good Energy, we look at this as a way of helping to reduce our cost per acquisition, improve our customer retention rates, and ultimately providing a service to these drivers as they move into electric vehicles. And all of this really is what gets pulled together over the longer term by the kind of flexibility platforms and energy optimization that through smart charging, through being able to optimize this energy, we're able to provide a better service, a more cost-effective piece, and help cars charge at a time that both suits the grid and is cleaner, that we'll continue to build out. And going on to ZapMap, so ZapMap is the leading EV mapping platform in the UK. They've currently got over 95% of all public charging points, with 70% showing live dynamic data, which updates every couple of seconds. Zap have over 80% of all EV chargers downloaded their app, over 320,000 downloads, of which 180,000 of those are registered users. And the data that sits behind there is around email addresses, locations, postcodes, make and model of car. So it's a very rich data set that sits underneath there. And a really high proportion of those are what we call cross-platform users. And these are people using the app, mobile, web, and really engaged through the ecosystem and planning routes and using it on the go as well. And we see over 130,000 route plans saved of people that have gone on to plan these routes, use them, and use the various filters to understand the best way of getting to and from the destination. And then finally, the piece that really separates ZapMap from other homogenized mapping platforms is these user interactions and around the sort of the 12,000 per month that we get. And what that is doing is it's updating on the status of the chargers, whether they're working or not, people have used them successfully, whereabouts they are in car parks, little tips and tricks in there. And if we look into many other businesses, the likes of Waze, and where they created value, it was that user engagement through knowing where traffic signals were, through knowing what live traffic data was. And this is what the users bring into ZapMap as a real strong piece. Then looking into 2021 and some of the key commercial milestones, we see the business model in Zap driven by three key areas, driven by the mapping, driven by payment, and driven by data. And so today, we've launched a new tariff with ZapMap, which we'll touch on shortly, but it's bringing more an innovative EV tariff out to these EV drivers that are customers of ZapMap and subscribed in there. One of the ways that we look at monetizing this user base is through a subscription model and through a freemium app, so akin to Strava, MyFitnessPal, Spotify. And what this is doing is the core functionality of the mapping and the payment will sit outside the firewall. That will be available for all. But what we'll be looking to do is bring this increased value-add services that sit behind there. So for heavy users or for people who need extra functionality, this is what the business will continue to build out. And we'll see this launched in the coming month. On the payment side, there's two key aspects to this. There's the partnership with FleetCor that we mentioned, and that is really a business solution that is focused on business and fleet customers, but it helps to drive adoption of Zap Pay with the charge point operators throughout the UK. And then Zap Pay itself, we installed a new commercial director, Alex Earle, and a new interim CEO, Richard Bourne, who've been doing great work in building out our partnerships here and helping to roll these out at scale throughout the year. And it's this payment that will underpin a lot of the growth coming throughout this year. And then finally, data in terms of data monetization. Zap already does a great job in packaging data and insights for a broad range of customers throughout the mobility ecosystem, ranging from auto manufacturers, OEMs, insurance firms, and many others. But one of the pieces that we will be continuing to build out is the forward-looking piece that sits within there. So to really understand EV user behavior, to understand utilization and how businesses can interact with and understand EV drivers. And then we've launched today a new tariff, which we're really excited about for a couple of reasons, really. One is using Zap as a strategic channel partner. Zap obviously have a leading name within the EV sector and in many ways are the voice of the EV driver. So for Good Energy, a way of understanding how customers interact with a tariff coming through such a trusted voice in the EV space, and providing something new for EV drivers is going to be really interesting to see the uptake in there. And the second piece is around the innovative nature in this. This is a tariff for people with smart meters, so SMETS 2, that we've touched on earlier in this presentation. And it's really around the kind of the free energy periods that can be offered, so 4-hour windows that will be at different times depending on summer and winter, and users will get notifications as when these free charging periods will be, based on weather forecasting, based on our own portfolio of renewables. And what's going to be interesting for us to see and to learn from and to adapt our tariffs as we go is how users interact differently with this. Can we influence behaviour as when people charge at a time that is better suited for the grid, when there's an abundance of renewables, or how people interact with that smart charging? And as Juliet touched on earlier, the evolution of this then becomes linking to the smart EV chargers, linking into flexibility platforms, and helping to really optimise this energy usage of both domestic users and eventually business users as well. Juliet, I'll pass back to you for the summary.
Thanks, Charlie. So overall, I think where we're at is that despite COVID, we had positive performance and business customer growth, cash from a strong cash generative position over the year, plus our new net cash position allows us to have capital flexibility. The platform for growth, Kraken, has gone well. We now are really beginning to start the pace on the smart meter rollout. I can see a couple of questions in the questions on that. ZapMap then is also primed to scale. So we've got, as Charlie went through, we've got the opportunities of really monetizing that customer base now and really getting the proof points around that. And then looking at, in terms of where we're investing, looking at taking energy and mobility as a service and really starting to see where the new opportunities are evolving in the heat market and the flexibility markets as well. So thank you very much for listening. We've got some questions in the side. So shall I just go through and sort of start to answer some of those?
Julia, perhaps we could start with some of the pre-submitted questions, if that's okay, and then move on to the live questions, if you don't mind.
Okay, do I need to... have I got a copy of those?
No,
I'll
just read them out if that's okay.
Okay, that's perfect.
And just while we do that, obviously you guys can look at the questions that have been delivered during the meeting itself. And just to remind investors, do please continue to submit your questions, and also like to remind that the recording of a presentation along with a copy of the slides and the published Q&A can be accessed from your investor dashboard on the Investor Meet Company platform. Just before we touch on to those pre-submitted questions, also like to remind you that your feedback is important to the company, and immediately after the presentation is ended, you will be redirected for the opportunity to provide your feedback in order that the company better understand your views and expectations. So let's move on to the pre-submitted question. The first one reads as follows. Hi, Juliet and team. First, I just wanted to say that I like the company and what you're doing. However, taking a long-term view and looking at your share price over a 5-year period, the company shares are only now at roughly the same price they were 5 years ago. If you include dividends, shareholders have essentially had, roughly speaking, about 5% return, or 1% per annum average at best. Please can you tell us what actions you're taking or going to start to take to generate a positive return on investment for shareholders annually and kickstart the shares upwards?
Great. So shall I kick off on that one, and then Charlie and Rupert jump in whenever you want to. So, I mean, I think what we've seen in the energy market, and actually I think our shares have performed relatively well if you compare us to, say, a British Gas, who I think have seen their share price continually drop till kind of more recently. There was obviously, it was 5 years ago since the CMA investigated into the market and brought the price cap in. I think we've navigated that really well. We've also pivoted the strategy sort of 2 or 3 years ago to really focus more on the business growth strategy, which I think has been really helpful. And then looking at EV as an opportunity and energy as a service. So I think driving the share price from here, I think we've done a lot of the groundwork really now to launch that. We've appointed a new and highly commercial CEO who comes from a digital transformation background. It's what you can see, what we've been talking through is that we know the energy part of this marketplace really well. We know particularly the renewables part of the market. But where we have really struggled and where we've seen sort of some of our competitors accelerate on the ideas that we have is through the digital transformation side. So by bringing Nigel on, who's got a big background, he's got marketing in his background, he's got digital transformation. That is his core, and that's what we really think this company needs now. And then obviously, as time goes on, we've switched off the dividend, which is, I think most companies have done during COVID, but we are looking to continue that dividend going forwards. And we hope that that should also begin to drive value, as well as driving value through the overall growth of the business. I think the investment in Zap, so obviously the more users that we drive through Zap, that once we start monetizing those users, that should just have a general pickup. And I think Charlie mentioned that the growth in the users on Zap are directly related to the overall growth in that marketplace. And I also think that we've only had a small part of the year really reflecting the cost savings and efficiencies that we're from the Kraken and NSAC, and a full year we should start to see more of that come through. Rupert, I don't know whether you want to sort of comment on that last part.
I don't think that there's probably that much to add in terms of the absolute cost. I think the other important point is that now that those systems are in place, they are tried and tested, scalable systems. So as we start to build on both the domestic side and on the business side, then there is plenty of capacity for further efficiency and the sort of operating leverage benefits that we would expect to be able to get out of those systems. I think that's a really important point about how we can exploit them in the future as well.
Okay.
That's great. Thank you very much indeed. The next one, I think we've kind of touched on in the presentation, but what is your target in deleveraging debt in the business? What is the blended average interest cost you pay? And once you've reduced debt, what do you intend to do? New renewable investments, other investments?
Rupert, do you want to take the first part and I'll touch on the second part?
Yeah, of course. So I think it's a good question in terms of what is our target on deleveraging. You would have seen the reduction in debt that we have been managing over the course of the last 2 or 3 years. And I think we've laid out fairly clearly today and in the sort of announcement our intention in terms of the full repayment of the retail bond by the end of next year. That will take nearly £17 million worth of debt off our balance sheet and effectively remove debt from the supply side of the business. So we will just be left with the generation asset debt. That's all now in one place, financed by an organisation called GCP, and again sort of highlighted in our preliminary results this morning. The coupon on that is a little under 6.5%. And runs out till 2035 in line with the life of those assets, and it will amortize over the course of those 15 years. So it will reduce over the time, and the interest cost associated with will reduce alongside that.
That's great. Thank you very much indeed, Rupert. Next one we've got here is, for those who don't follow you or the energy sector, please could you tell us about your long-term strategy for growth? What kind of levels of growth do you or should we expect? And what in terms of revenue uplift should we conservatively expect also?
In the core business, so the majority of customer growth in the market is driven by energy switching sites in the domestic sector and brokers in the business sector. So there are two factors in there. One of the reasons for the work on the greenwashing work was to basically convince the regulator to put the regulation outline that people couldn't missell on green, and then to encourage the switching sites like USwitch to come up with a green ranking. So we have successfully now obviously got USwitch to come up with that green ranking. We'd hope to be able to persuade some of the other organisations, but I think USwitch switches about 40% of the market at the moment. So it gives us a significant increase in market space. What we are also testing is a range of different tariffs through that. So there's fixed rate tariffs, agile tariffs, and Charlie touched on the new tariff that we're going to now start selling through the ZAP customer base. In terms of the business customer growth, the NSEC system integrates directly into a lot of the broker systems. So that means we can actually quote for more than we've traditionally done previously, because it's been quite a manual process. We've picked and choose who we go to. Hopefully with this system, we'll be able to do more. And we're also going to be offering gas to business customers. So that should increase the potential around that as a result of the NSEC system. I think then the rest of the growth that we'll be really starting to try and do is looking at, obviously, ZapMap and the mobility as a service will really be driven through the Zap approach, and then start to look at, okay, so what does that look like for heat, and what does that look like for flexibility? And I think flexibility is probably the furthest away. Heat will be the next one we start to look at. So where is the marketplace for heat pumps? Heat pumps switch people out of, particularly initially, out of oil. So that means it's a new market share for us into electricity. And heat pumps in people's homes, we're beginning to see that really come in through new build and it's sort of inner London, inner city infrastructure. So those are, again, opportunities for us to work with developers and provide a service, a heat service through that. So those are the kind of areas that we're looking at in terms of driving growth going forwards.
That's great. Thank you so much, Julia. Next one we've got really is just a little bit around the company. What is the free float of the company? Who are the biggest shareholders? And how much skin does management have in the company?
Charlie, do you want to take that one, actually?
Yeah, I can do it. So we're obviously an AIM-listed company. Our largest shareholder is Eco-Trust Group Limited. They've just got over a 25% stake. Another of the notable shareholders in there are some of the original investors in the Edwards family who Juliet set the business up with them 20 years ago. There's key investors in there. We also have a number of leading sort of UK institutions ranging from Castlefield, West Yorkshire Pension, Schroders, GPIM. So a broad range of investors that sit in there. The free float of the company, I think, as for many AIM stocks and companies of our size, isn't as large as we would like it to be, but we continue to see that grow. And I think what we have seen over the course of the past certainly 6 months and 12 months is real positive momentum in there from both retail investors and institutional investors, which we're starting to see in the share price.
Thanks, Charlie. Hello?
I do beg your pardon. The next question we've got here. There we go. Professional error. I have myself on mute. Next question we've got here is, from what I can see, in terms of customer numbers, business customers have been outgrowing general public customers. Can we infer that climate concerns are driving more business customers to you because of your pure play on sustainability? And also, if this is the case, are you doing more on the marketing front to increase awareness to drive new customer growth?
So in terms of, I would say that is true. So we saw particularly at the Conference of Parties on Climate Change at COP25, which was in Paris. No, it wasn't COP25. It was before that, COP20. What we saw there was a lot of companies coming together, sort of big brands like IKEA, Amazon, basically calling for government to make big changes on sustainability, and then those companies also making commitments to themselves in terms of what they were looking at in circular economy, but also where they were purchasing their power from. And so we had definitely seen a raising awareness for companies who want to go sustainably. More recently, we've seen some of the banks like NatWest not investing or not providing debt to any coal power going forwards, I think it is. And a lot of the big law firms basically making statements that they're not going to be providing services into some of the fossil high marketplaces. So we have seen business make some quite big moves. And that definitely is something that we are is part of driving our growth. I think in terms of the domestic side, what we've seen is a lot of people coming in with fake green tariffs or greenwash tariffs, which means that a lot of customers are going, oh, well, that's a cheaper tariff. It's the same. And obviously it's not. And that has been the reason why we've done a load of work on greenwashing. And in terms of driving new awareness, one of the things that we're doing is we're using tactics that doesn't have as much upfront work in terms of raising awareness. So we've just launched a podcast, which is a consumer-led podcast with various guests that talk about, it's called Great Green Questions. Do listen. And we're going to be using that. So that's already gone up on a platform that's got 1.5 million users. So we're starting to try and be clever about how we spend our brand marketing and get the awareness of the business up.
That's great. Thank you very much. And we've got 3 more of the pre-submitted questions that we can just cut through. You say that you're a leading player in the decentralized market. Could you explain this in a little bit more detail, and also your market shares?
So I'll touch on the decentralized market part. So there's nearly 1 million renewable generators in the UK, and a lot of those we say they're decentralized. So that means historically, 20 years ago, most of the power stations would have been connected to the national grid. That's a high voltage grid network, and we call that a centralized system because those are centralized dispatched by national grid. So they have to have an agreement with national grid to dispatch. The decentralized market is where power generators are connected to the distribution networks. That's the networks that all our homes are connected to. And they can distribute power whenever they want. So they don't have to have an agreement with national grid when they can distribute their power. So that is really what we call the decentralized marketplace. It's basically power generators that are connected at low voltage and are not controlled by the central national grid system. In terms of market share, we look after about 170,000 feed-in tariff customers. So out of that million, we look after about nearly 200,000 of that, and that's close to a 20% market share of that market. We are one of the larger players in that marketplace, looking after those small generators. And was that the total question? I think it was, wasn't it?
Yes, that was indeed, Juliet. And we've just come on to the next one. Just slightly conscious of time, but I think we'll have a little bit, if you can manage a little bit of time, just to go through some of the live Q&A. Do you have any plans to fund battery storage to help relieve potential energy intermittency issues on the power grid due to the switch over to renewables?
So that is a great question. And essentially we did previously, so we did investigate. So we actually we looked at investing in battery storage at the Eden project in Cornwall, which was a behind the meter battery storage. And one of the things for battery storage is a lot of the income streams have been changing significantly. And so trying to make the business case to invest in them has been quite hard. But I think we're now going to open up and look at that again. There's one particular income stream called fast frequency response, which seems to have been reviewed, and that income stream is looking a little better. But in terms of sort of where that might go, one of the pieces is that we think battery storage potentially can play a role behind the meter in domestic properties as well as business properties. And we are constantly talking to different providers about what that might look like as a proposition and how that might go forward. And I think in terms of propositions that we're looking at, battery storage and flexibility services is definitely one. But remember, electric vehicles have a battery in them, so that might be another one. Solar panels, ground source heat pump and solar thermal, all areas that we think will start to play a bigger role in this new marketplace.
That's great. And I think the last question did actually cover us just in one of your earlier answers. How does your share price performance compare with other utilities? If there's anything further to say on that, please do. And if not, then if I could just direct you to the live Q&A, just to click on that.
Yeah, I mean, I think if British Gas's share price goes back to about 2007, I think that was around £4 at that point. Today, it's trading at 56p. So I think comparison to a lot of the listed energy companies, we've done pretty well. But yeah, we'd like to see that improve, and we think we've got the opportunity to accelerate that now.
That's great. And may I just ask you just to click on that Q&A tab? You'll just see
yes,
questions
I can see
come
that.
Through.
Yeah.
And I know we've just gone through the hour. I'm just conscious of your time and everybody else's, but perhaps if we could get through some of the questions, if you would, that'd be wonderful.
Charlie, do you want to do electric juice? I've talked a lot.
Yeah, I can start on that one. So the question there is around electric juice launched after Zap Pay and already substantially more networks signed up 8 compared to 2. Given the idea is to have one card that works for everything, users are unlikely to use both Zap Pay and Octopus Juice, so we'll choose the one with more networks. What is Zap doing to mitigate this competition risk? So I think the real differentiator of Zap is that it is one platform that does it all. So we talk around search, plan, pay, and you having the mapping functionality with over 95% of charging points, 70% of live dynamic data. You're able to search for your route in there, plan it with the route functionality, the route planning functionality, and then pay direct through Zap Pay. And the key word in here that both the CMA are interested in, and I think is going to be key to reducing barriers of adoption, is interoperability. And what that means is that it's available for everyone to use, and that's the real focus that Zap are working on there. And what that means is they're building direct agreements with all of the charge point operators to make that a reality. I think something like when we look at electric juice, it's a great idea to be able to put that through your bill. It's quite an innovative idea. However, there isn't the mapping functionality, so you still have to go and use that map to find where those points are. And what they've done is they've partnered with one of the roaming agreements, so Girev in the back end, and they have a number of charge points separated to them, which is a slightly different model. I think for ZapMap, the key is going to be increased engagement through that app and signing up more charge point operators. The fact that you can pay via ZapPay in 3 simple, quick steps whilst you're in the app, and potentially then building that in-car through partnerships with auto manufacturers and OEMs starts to make that more of the go-to piece. And when we look at the business and fleet solution as well, what we're going to see in there is that should be driving adoption as more of these fleets go and start to use ZapPay as their default mechanism of payment.
Thank you, Charlie. So I'll take the next question. With the new CEO coming on, should we expect a change in strategy or strategic review? So I think from the overview point, in terms of looking to move to energy as a service, I would suggest that it's unlikely. I can't rule it out completely, but we did hire Nigel with a specific view that his skill set would really support moving towards that. And I think if you look at the overall market in transition, there are some underlying pieces that are going to happen. So underlying, we're going to see electric vehicles come through. Underlying, we're going to have to see electrification of heat, and underlying, we're going to see increased involvement of households and businesses in the energy market. So I think overall, we'll see the overall piece. I think in terms of some of the specifics around what is our marketing strategy, what is our digital strategy, how do we enable consumers within that overview, I think, yeah, he will definitely come in and shape that strategy. Then sort of next question is, what is competitive landscape for you and what limits your growth profile? So I think where we've seen that there are 2 things that have limited our growth profile on the core business has really been around price, and really been about the fact that the market, there is no differentiation in the market between greenwash product and us. I think the greenwashed part we are now resolving, which is really exciting. So I think we can produce that. And obviously with the increased digitization of our proposition, we can see a reduced cost. I think obviously I'm sure Nigel will then start to look at, well, what else could we add to reduce the cost and make that our offering as overall as a package more competitive. And I think that's something he'll be looking at. I think in the business sector, we're relatively competitive on the core business. But obviously, if we can add more value to that proposition, we'll be more value to businesses. And then in terms of ZapMap, I think the biggest limit at the moment is whether we can go sort of international with that proposition, because obviously car manufacturers, if you want to get into cars, if we want to get the technology into car, we're going to need to make sure it can go across sort of boundaries and people can drive from one country to another. So that's one of the kind of areas that we're looking at now, is the international prospect of that. So Rupert, do you want to have a quick chat about smart meters and the targets we've got on that this year?
Yeah, of course. Thank you. So we're currently doing around about 3,000 installations a month. It was a bit slower at the back end of 2020, and it's picking up pace now. And I think there's an opportunity to go a little bit faster in terms of pace. But I think at that point in time, we'll probably hit a limiting factor of the number of customers who are actively seeking that smart meter. We think there are benefits to both the consumer and to the company of maximising the number of smart meters that we do roll out, particularly the SMETS2 meters. However, there will be a limiting factor, we believe, in terms of customer take-up.
Okay. Thanks, Rupert. And then finally, how can switching increase in the market, and what's Good Energy doing to increase switching rates in the overall market? Won't that help Good? So I think overall switching in the market is at a relatively high level comparison to where it was probably 2 or 3 years ago. But in terms of so what do we want to see as an organization? To be honest, what we want to do is switch customers and then keep them. So that is the challenge for any energy business. And the way that we would want to do that is to differentiate on the switching site. So that's what we're doing with our greenwashing campaign. Then what we want to do is add additional propositions to what we are offering. So that is energy as a service, sort of actually providing a longer term service that customers can get multiple value from, whether that's sort of paying for their charging, having their charging at home, being able to get value from flexibility in their charging, and also through to sort of being able to map their journey. All of that part, if people leave us, then everything's taken away and they have to replace everything. So it's trying to make propositions a little bit more complex so we get a stickiness to those customers once we gather them.
That's fantastic, Juliet. Thank you. Juliet, Rupert, Charlie, thank you very much indeed for your presentation and addressing all the questions that we've had through. Juliet, perhaps I could just ask you for a final few words before we redirect investors to give you some feedback, please.
Yeah, so I think overall we are quite excited about where we've come out. I mean, obviously the news about sort of the positive news that we're seeing about the economic recovery, and obviously a lot of the noise in the energy transition market. So we know that COP26, which is going to be in Glasgow in November, is going to be in the news increasingly over the year, and we're going to see a lot of excitement about new investments in low carbon sort of energy transition and what consumers are doing as part of that. So I think we're in a good position. We need to make sure we keep the pressure up and keep accelerating, because this is a competitive market. But I'm fairly confident now we're not going to have legacy systems that keep us hold us back, and that we've got a good, strong cash position. So we don't have to be worried about actually how we trade this year. We just need to keep pushing on and making sure that we now start to deliver some of these propositions. And I'm really excited about the new CEO. Any news on when Juliet's heading after leaving Good as a CEO? So the new CEO is joining on the 1st of May. I am going to formally stay with the business till the 31st of July. I will be staying on the board of both Good Energy and ZapMap. And I also sit on the board of the Crown Estate and Innovate UK. I'm obviously looking at many opportunities at the moment, and I haven't got any finalized where I'm going to go next. But it's likely that I probably won't take another full-time role, but look more as a consultancy role and board roles. So there's quite a lot of exciting things out there at the moment on those. Thank you very much.
Juliet, thank you very much indeed. Juliet, Rupert, Charlie, thank you for updating investors today. Can I please ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback. If you've accessed the meeting from our website, the feedback page will appear in front of you. If you've accessed the meeting via the link sent to you in the email, you'll simply be asked to log back in. It just takes a couple of minutes and be greatly appreciated by the company. On behalf of the management team of Good Energy Group PLC, we'd like to thank you for attending today's presentation. That now concludes today's session. Thank you and good afternoon.